the decibel of the buzz in the IPO market is actually hard to ignore at this time. From Lenskart defying its high valuations, rhetoric to attain 100% subscription on day one, to Studs accessories, where the intense NI participation is what has come in on day two. If you talk about Okla, 49 times. That's the impressive booking that we've seen on the final day. It was the Friday of IPOs. That's what it looks like. Now, to take us through the updates on each of these offerings, let me get in my colleague first, Jasmeet, to tell us what he has in store. Jasmeet, over to you.
Well, Red, thank you for that. It has been a week of IPOs. From the week start itself, we see IPOs coming down in this particular week and almost capping up to 10,000 odd crores. Starting up with Lenskart, while this company has been in the buzz on the back of the valuations, but if you look at the subscription, it has already hit 1.1 times X on the day one itself, while the QIPs lead by 1.42 times. On the other hand, retails are at 1.31 times and NI is at 41%. So we see a traction across the majors for this particular company. Now, in terms of stud accessories, while this company operates in the helmet manufacturing and motor vehicle accessory space, if you look at the overall subscription, the NIs are leading in this by 9.62 times subscription. On the other hand, retail stands at 6.02, while the QIP stands at 4%. This was a day two for the company yesterday. Now, lastly, in terms of Okla India, while the IPO shut yesterday, and this was a day three for the company, we see the lead QIPs led in this particular company, and the company is in the space of breakfast and healthy cereals, and also is recognized under the brand name of MTR. While if you look at the overall subscription, that stands at 48 times, while in terms of QIP, they are 117 times, which has been the highest for this particular company. So all in all, a good subscription rate for the IPOs, must say.
Thank you so much, Jasmeet, for that. In fact, to take this discussion forward, let me get in Narendra Solanki, Head Fundamental Research at Anand Rathi and Stockbrokers, and Aditya Shah, who continues to be on the show. Narendra, let me come to you first. And this is not a conversation about a single IPO. We're talking about a Lenskart, which is open right now, Okla, which was already there, and Studs. Apart from this whole host coming in, you have Grow, which will be opening as well in the next couple of days. They've just had a press conference. Flipkart has just filed a DRHP. So taking this entire IPO hype right now in the markets into consideration, the kind of valuations that all of them are demanding, your initial comments, are they justified versus the kind of growth trajectory that they're looking at? Or what would you actually have to say on it?
Yeah, good morning. Yeah, definitely. If you see the IPO market and even the primary market has got a lot of optimism lately in the second half, especially. And this year already we have crossed, I guess, 90 IPOs, and we are very close to crossing last year's number of IPOs as well as the amount of funds the primary market has raised. And I think in next 2 months we would comfortably cross that. Now, coming to the valuations part, definitely, if you see, some of the IPOs have been priced at premium valuations, and if you compare them with historical numbers, the valuations may look rich. But you also have to take in factor that these companies, in which primarily we think that the valuations are rich, are in a very early stages of their businesses, and there's a lot of runway for them in terms of growth which is left, and the market penetrations for all these companies are very at a very starting stages in early single digits or double digits, and there's a lot of runway both in domestic markets as well as international markets. Then the second reason is, if you see India as a whole, so the investable surplus has been growing steadily, and there are not a lot of options available for the investors in order to invest their surplus money or savings. And India is also a capital locked economy wherein investors do not have an easy option to invest for overseas assets. So all the money you generate here in India has to be invested either in the equities or in the real estate or in other markets. And equities being one of the easiest market, both in terms of liquidity, access, transparency, and ease of managing the money, generally finds favor with the investors who don't want to physically manage the the assets and then have liquidity issues, etc. So all these three, four factors are actually driving investors towards equity and resulting in too much money chasing in too few good assets. So all these three, four reasons combined has actually created a situation wherein we see that the valuations gradually over a decade or so has been inching higher for Indian markets.
There. Okay. Narendra, that's an interesting commentary that I pick up from you. Now, Aditya, coming to you, the valuations that we're talking about when it comes to IPOs, even if the valuations are high, they have to then be justified with the kind of growth that the company would give out. Do you think all of these IPOs are justifying the valuation as against to the growth that they can get?
I can say that in FI40, the FI40 Lenskart's profitability will be X and then justify the valuation today. But who knows what will happen in FI40? So from my perspective, these valuations are exorbitant for a company that has never made profit. It is now trading at about 70,000 crores of valuation at the upper band. It is absolutely really very crazy. The question here needs to be asked is in July, the valuation was at 7,200 crores, and this jumped up to 70,000 crores within a matter of about 4 5 months when nothing particularly changed in the company. So, from my perspective, you cannot say that just because there is there's high growth, you will buy stock at any valuation. Time and again, we have seen the market telling us that if you pay any valuation citing growth, and if the growth slows down a little bit, you will see the valuation tank. We've seen Ola coming at any valuation and then the stock price tanking. We've seen Paytm do the same thing. We've seen about Zomato also in the initial days. It did not do well as the valuation was really expensive. So you cannot justify expensive valuation by saying growth. If you come with expensive valuation, you will have a price correction and a time correction, post which once the time correction is done, the stock price may move higher. So it is not to say that Lenskart will not do well. Lenskart may or may not do well. But at this stage, the valuation does look really, really very expensive with no justification as to how the market cap moved over the last 6 to 12 months. And the promoter saying that the valuation does not mean anything for a good company does not bode too well for the company. So liquidity is the only saving grace for companies like Lenskart. I'm not too much enthusiastic about buying any stock at any valuation.
Okay, so then Aditya, a quick view in terms of what would you advise retail investors to do? Really hold off in terms of their investments into IPOs when the valuations are really exorbitant, and then see the kind of growth, say, over the next 1 or 2 quarters, and then decide? Because what usually happens is just the year before the IPO is when the companies show profitability. Before that, they're all loss making. And I think this is a trend which absolutely needs to change as to how can SEBI regulate this aspect. In fact, in one of the conferences or addresses, you had Shaktikanta Das, who had probably come out and said as well that valuations which are excessive high probably don't do justice, because it's the retail investors who suffer. It often leads to post-listing slumps as well, eroding retail investors' value. What would you have to say to this?
So SEBI could come in and say that a valuation up or down of more than 25% 1 year before the IPO should be justified and should not be allowed here. There's a gap of about 5, 7, 10x on the valuation, which I don't think is in the spirit of an IPO. If the promoter was really concerned about retail investors, they would not do such kind of IPO or IPO gimmickry, as I call it, because that valuation market cap does not justify 6 months before at about 7,200 crores and now at 70,000 crores, the first point. Second point is retail investors, in my opinion, Lenskart, my vision is blurred looking at the Lenskart IPO. I don't think that 70,000 crores of market cap is really justified. Retail investors will look at the gray market premium and then invest. My advice to retail investors would be to wait to see how the company turns out. And bigger concern with Lenskart, which nobody's talking about, is 50% of the money that they will gather from the IPO will only go for their OPEX operations, and just 50% will go for their capacity expansion in Vizag. So from my perspective, that IPO is a get out of jail card for many PE investors, and I don't think that the saying that growth will come about justifies the valuation at which Lenscard or many of these IPOs come about. So retail investors must try to avoid this IPO.
Okay, that's interesting when it comes to Lenscard. And I'll just correct myself. I meant with regards to SEBI and not Shaktikanta Das, because I think that was a slip of tongue overall. But very quickly, Narendra, your view on this, because we're talking about high valuations, but you cannot debate the kind of anchor book that Lenscard has got as well, right? I mean, it's actually got the FIs back into the Indian markets from an IPO perspective. So that is one aspect that you need to consider. Your quick comments in terms of what retail investors should do when it comes to looking at valuations of IPOs versus the growth that they would potentially see versus the growth that they've seen in the past.
Yeah, I think retail investors individually must assess how they want to invest and what kind of valuation they want to enter and what is their holding period, because that is more important. When you are investing in a highly rich valuations, then it is already known that your holding periods must be at least 3 to 5 years and beyond. So if you are able to visualize that much and hold that much, then only it justifies the kind of valuation, because by that period of time you would be actually seeing the overall growth for the company coming in and then justifying the valuations at the entry prices. So if you have that kind of a horizon, then only it is reasonable to look at the stocks which are either at not profit or are highly overvalued at the time of the IPO. Otherwise, you just wait for the good stocks at right valuations and invest. And there are also a lot of secondary market opportunities as well in the markets where you can generate your returns. So it's not necessary that you try and invest in each and every IPO. And rather than that, you try and see what kind of opportunities are there in both primary as well as secondary markets. And based on your return expectations, you try to invest and make your portfolio according to that.
All right. So I think that will be good in advice as well from both Narendra and Aditya. But thank you so much, gentlemen, for joining us on the show and sharing your views.